Eric Sprott, Rick Rule, and Keith Newmeyer are three successful resource investors coming together for one simple reason: to buy cheap assets from distressed companies and seize this once-in-a-decade opportunity to buy gold, silver, and other mineral projects for pennies on the dollar. First Mining Finance Corp., trading on the TSX Venture under FF, a recently launched venture with the sole purpose to acquire advanced stage natural resource projects, and starting on day one with 18 projects. Management has already identified over 60 additional projects to acquire. Learn more about First Mining Finance at futuremoneytrends/investright.
Well, hello everyone, and welcome to CrushTheStreet.com. I'm Kenneth Amaduri, and today I'm joined with John Rubino of DollarCollapse.com. He's the author of several books, including The Money Bubble. And going back to when I was first researching the economy and actually researching the economic crisis that the globe and the U.S. would be facing, his website was one of the first that I did come across. So I'm honored to be with him today. Thanks, John, for joining me.
Oh, it's great to be here, Kenneth. Good to talk to you.
John, if you could just kind of introduce why you started DollarCollapse.com and how did you come up to the conclusion that there are problems with the monetary system, and what led you to wanting to educate so many people on this issue?
Sure. Well, I'll give you the short as possible story and hope it's not too long. Back in the early 2000s, I wrote a book on the housing bubble, which was pointing to all the stuff that eventually did happen. That we were building up a bubble that was going to burst, and it would cause trouble for a lot of different people. And my perspective when I entered that phase of research was that we were basically a healthy system that was seeing kind of rolling financial bubbles where one sector would get a little too hot, then it would blow up. But after that, life would go on as before, as with the tech bubble in 1999 and 2000. But as I dug into the research, I saw that we had some serious structural problems, that we were building up way too much debt, more than we could ever hope to pay off, and that we were making the classic mistakes that countries in the past had made with their currency that ended up causing a systemic financial crisis, not just a sector bubble popping and the stock market going down for a while, but something a lot more serious that was going to affect the nature of the currency itself. And I had met James Turk, who runs Gold Money. In the past, I'd interviewed him for a few magazine articles, and we'd gotten to be friends. So I approached him about writing a book about the serious, massive financial crisis that seemed to be coming, and he of course was on board with the idea, and but didn't have time to write a book himself. So we collaborated on the book, which was called The Coming Collapse of the Dollar and How to Profit from It. So that was 2004, and I set up DollarCollapse.com as a website to promote that book, and thinking it would be about a one-year gig. The financial system seems so fragile and so imminently in danger of collapsing around itself that I figured I'd do it for a year and chronicle the collapse of the U.S. and probably the global financial system, and then go on to something else. But this dysfunctional financial system has managed to hold on by doing things that can only be called experimental and incredibly dangerous for another decade after that. And so DollarCollapse.com, the website, which I'm still running, has morphed into a news aggregation site / blog where I'm chronicling the continued descent into financial insanity of the global financial system. And make no mistake, it has truly gone insane. The things that we're doing right now are in a lot of cases things that if you'd gone back 10 or 15 years and asked mainstream economists if things like quantitative easing and eliminating cash and negative interest rates were even possible on a wide scale, they would have said, no, that is theoretically impossible, and if you tried it, you would just completely blow up the system. Well, here we are. We're doing all of those things. So it's been a fascinating ride. It's been a decade of chronicling this, and I can say with certainty that it's only gotten worse since 2004, when it looked like the system was about ready to blow up already.
How much longer do you think it can go on like this?
Well, it's gone on 10 years longer than I thought it would. So who knows now? We're reaching the point where the numbers are just amazing across the board. You look at, Japan's government debt or derivatives in the global financial system, or U.S. Total debt, or almost any other major financial indicator that involves debt and leverage that's out there. And there are levels that in the past have preceded massive financial crises. But in the past, those extreme readings on these various indicators have been in specific sectors. They haven't been systemic. They haven't been everywhere. And now they're everywhere. Every major country has taken on vastly more debt than you would think, just looking at the numbers, that they could manage. And they've been able to manage it in the short run by pushing interest rates down to levels that have really never been seen before, and by encouraging forms of leverage in the leverage speculating community, the big investment banks and the hedge funds, that we've also never seen before. So we've created the conditions in which you would expect some kind of really serious financial crisis to occur. But we've got all these experimental monetary policies out there that so far have been able to delay that inevitability. And since it seemed unlikely that they would succeed in the first place, the fact that they've succeeded for a few years means that it's impossible to say when it blows up. But what you can say is that as these imbalances are allowed to continue to build, in other words, as we delay the inevitability of a big financial crisis by taking on more and more debt, the crisis, when it comes, is going to be even bigger than it would have been 3 years from now. And it's going to be widespread. It's going to affect every major financial asset class, and it's going to do so in unpredictable ways with unpredictable timing. So we're basically heading for a period of chaos, but we don't know when it starts. That's the problem.
Right. So you're talking about the financial collapse, the economic problems that will happen when we do have this dollar crisis. But as far as other consequences and potential global changes, do you see this leading to anything?
Well, there are a lot of trends out there that, allowed to continue, will dramatically change the global economy. And one of them is the flow of financial power from west to east. For instance, China and India and Russia are pretty much buying up all the gold that is produced by the world's gold mines these days. And so the question becomes, what do they intend to do with it? Or they're either just investing in something that they believe will become more valuable, as fiat currencies are necessarily inflated away to cover all the debts that the developed world is taking on, or they're building up a war chest for some kind of a change in the global financial pecking order that will involve their currencies, because they own so much gold, being perceived as relatively strong currencies, and which in turn gives them the power that flows from having a rock solid currency that everybody wants to own. So there's no way to know exactly what the plan is, but you can certainly see the flow of financial assets back and forth. They're tossing us dollars, fiat currencies. We're handing them gold.
Do you think it'll be a pull the plug sort of event, or maybe a slow, gradual decrease of use of U.S. dollars that will just kind of shift the power from west to east, like you put it?
Over time, if the developing world currencies, like specifically the Chinese yuan, become mainstream trade currencies. In other words, if you can use yuan to buy and sell on the global markets in some proportion that relates to the size of the Chinese economy, which is now the second biggest in the world, then that means we'll need fewer dollars in the future relative to the size of the economy than we do now, because right now about 40% of global trade takes place in dollars. And maybe 2% takes place in yuan. Well, if you shift the yuan up to 15 or 20%, to reflect the size of the Chinese economy, then the decrease has to come, at least in part, from dollars being in less demand. And so over time, if it happens in a really gradual way, that would probably be good for us from the point of view of the guys in charge, because it would be like us winning the currency war by making our currency less valuable over time and allowing us to sell more stuff overseas, because we price our stuff in dollars, so it's cheaper if the dollar is less valuable. So that would be considered a win by the guys in charge. But of course, it would be bad for lots of other people. Savers. If you're saving in a currency that's going down in value, then your savings diminish in value over time. And so what we're doing as a package with our economic policies are disadvantaging savers. We're telling retirees and eventual retirees, don't bother putting money in the bank, because we've now pushed interest rates down to zero and in some cases negative levels. And so if you're going to save money, and you want to do it in a safe way, you can't do it. You have to just accept the fact that the money you put away isn't going to earn you anything, or it's actually going to diminish in value. Therefore, you've got to take risks. So we're pushing all of the people in the US and around the world who used to be risk averse. We're just trying to sock away some money. We've pushed them out on the risk spectrum where they have to become, in effect, hedge funds, where they're buying equities and junk bonds and foreign assets and things that go up and down in value. So with them priced more or less for perfection today, during the next bear market, a lot of these poor retirees who are just trying to get by on their savings, or the pension funds that are supposed to be investing fairly safely for their clients, are going to find out that they actually lost 30% on their junk bond and equity portfolios in 1 year. And that's going to set them so far back that it's going to be impossible to dig out of that hole. And so their plans are going to be derailed. Millions of people aren't going to be able to retire at a time and in a manner that they were expecting. And pension funds are going to have to either scale back the benefits that they pay to the policemen or the teachers or the firefighters who are going to retire and who would have lived on those pension benefits. They're going to have to scale those benefits way back, or they're going to have to ask for a lot more money in the near term from those people. And so either way, you're impoverished if you're depending on some kind of a pension plan. So, today's economic policies are in a lot of ways despicable, because it's disadvantaging the people who are least able to handle it and helping those who deserve it least. The big banks or the hedge funds who are on the right side of these trades are making a fortune right now. And so the bankers are getting record year-end bonuses, and they're retiring very rich, going off into the sunset and leaving the wreckage of an economy that the rest of us are going to have to deal with in our golden years.
Right. It's artificial stimulus that the government, the Federal Reserve, they're injecting into the economy, and it's creating this very, very scary bubble for all of us, all as savers or just people who aren't prepared. And hopefully people are preparing and doing what they can to prepare for a potential crisis and an inevitable crisis that will happen. But going back to the Chinese yuan, do you expect the yuan to be added to the SDR basket of currencies during their meeting this year and effective January 2016?
Well, I don't know about the timing, but eventually, sure. It's the world's second biggest economy. So you would think that they would have a leading role in every multinational institution, right? And so at some point, China is going to be invited into all these multinational clubs. And Jim Rickards, who I think is one of, if not the sharpest analyst of this process, says that China doesn't want to overturn the global financial system. It wants to be invited in. And that's its reason for accumulating so much gold, to give it basically an entry ticket, the cover price of being invited into something like the SDR. And so it will announce a much higher level of gold reserves at some point in the future. So let's say 3,000 tons, which puts it in a class with Germany and behind only the US as far as gold reserves. And it'll announce that, but it won't use gold as a weapon to threaten these other currencies. It'll use its gold as a way of saying, look, I'm rock solid. Our currency is just as good as your currency because it's backed by all this gold. So let it play a role in the global economic system. And one part of that role will be in SDR, special drawing rights at the IMF, which is a kind of a alternate currency run by the IMF that is basically a basket of other currencies. So in that sense, it's just as fraudulent as the other fiat currencies, but it's not seen as fraudulent yet. And it's sort of like an asset-backed bond that includes lots of bad mortgages. The bond might still be seen as a valid financial instrument because it looks like it's diversified. It's got all these mortgages, but a lot of those mortgages blew up in 2008, 2009, and it crushed the value of those bonds. Well, the SDR is sort of the same thing. It's a basket of fiat currencies, all of which are being mismanaged, with the possible exception of China's currency. And even China has borrowed huge amounts of money lately, so they're on the verge of a financial crisis that they might or might not be able to navigate. So nobody is managing their currency with an eye to long-term stability. And there's an important reason for that, and that is that once you hand a printing press to a government, the temptation becomes overwhelming to use that printing press to get through the next election and to buy off different constituencies and to invade whoever you want to invade, and basically to do what you think needs to be done in the moment without regard to the future consequences of your money printing. And so everybody's doing it. So all the world's currencies are being inflated away at varying rates. And eventually that's going to be figured out. But in the meantime, people still accept these currencies as something with intrinsic value, and they treat them like actual money. And until that changes, this system can go on for a little while longer.
It's all about perception. When it comes to the U.S. dollar, and over the last year, we've seen the U.S. dollar do relatively well against the rest of the world, devaluing their currencies. How long can this go on for, and what are the consequences of the rest of the world doing this to such a large extent for so long?